If infinite banking is so powerful, why are there so many people out there saying it's a scam? Stick around. That's what we're going to be talking about today.
Enjoy the episode.
If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad Poor Dad along with Nelson Nash's infinite banking concept. Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen along with our co-host Anthony Faso. And today we're going to be talking about if infinite banking is so great, why are there so many people out there saying it's a scam? Right? Anthony, are they missing something or what's up?
They are missing something. And first, one thing I always say, this concept and really whole life has been around literally over 200 years.
Great point.
And if something is a scam, eventually people will figure it out and stop buying it. But for somehow people are buying more and more whole life every year. So I think that should hopefully at least set the tone. But on the other side, I would say, to be honest, if you were to come to me probably 17 years ago, I probably would have said it was a scam. But the thing is, I wasn't educated, but I was skeptical, and we should be skeptical. But if we have skepticism without education, that's going to equal missed opportunities.
Well said, Anthony.
So, one of our mentors had said, if something sounds too good to be true, ask more questions. And that's what we would encourage you to do. If you're still listening to this podcast, you at least have an open mind. And that's what we are asking you to do, is to come in with an open mind. IBC is not for everyone, but it is definitely not a scam. But we're going to talk about today why some people think it is a scam, and we're going to have our response to those myths.
Anthony, you mentioned missed opportunities. I just got off a call with a young lady that called in, and she was 73 years old. And she had just spent the last 30 days researching IBC. And she felt like she missed out on an opportunity over her lifetime to implement infinite banking. So again, right, missed opportunities or lack of education can lead to those missed opportunities. That's why we're putting this out here, to hopefully get you guys educated. That way we can make the most of our financial future.
Now, Cam, what do you think's behind why people do call it a scam?
Man, there's a lot of reasons, but we broke it down to really what we believe are going to be the top 3 reasons. Mm-hmm. One, it's always a misunderstanding of how whole life insurance works. Anthony, you mentioned a minute ago, this thing has been around for over 200 years. I agree with you. More and more people are learning about how this product works, and people want what life insurance does, not the wrapper on it, right? As soon as you start describing the features of whole life insurance, everybody says, that sounds pretty great. But as soon as you mention life insurance, right, they go, oh man, this is terrible, right? Because my dad told me so, or so-and-so. The second reason that people usually have a lack of education is going to come from bad policy design. For better or worse, in our industry, we have the control over the policy design. So the advisor can direct where premiums go, whether it's going to go to the PUAs, which create cash, or it goes to the base premium, which kind of supports the death benefit. And again, you're going to find bad apples in every industry that's out there. And it's and life insurance industry is no different, right? There's individuals out there that, intentionally create bad policies or unintentionally create bad policies. Again, I had a gentleman that I'm speaking to. He reached out to us last week, and he sent me over his policy that he had. I looked at it for 2 seconds, and I knew that it was not an IBC policy because he had zeros in the cash value column for the first 3 years. And his story was he'd heard about infinite banking and just went to his financial advisor and told him what he wanted. And he said he knew the guy didn't know anything about infinite banking, but he gave him a policy, right? So you had one guy asking for something, the other guy giving it to him, and neither of them know what they're doing. So That's one of the reasons that we end up in that place. The other reason that scams are IBC is labeled as scam is because people often compare infinite banking to high risk, high reward investments, and that could not be further from the truth. Right? If you guys have been listening to us for a while, you know that we are not positioning infinite banking as an alternative to an investment. Infinite banking is a cash management system where we can put our money in between deals and or as we're saving up for deals, right? So we say this all the time. Infinite banking is not the end all be all. We are not trying to create millions of dollars of cash value. We are trying to get money into a policy and strategically leverage against it to buy investments and opportunities that create cash flow.
Well said, Cameron. And when you had talked about shared that story, that triggered a story. I remember I met with a friend of mine from high school. We had reconnected, and he wanted to get into real estate and lending. And we started talking about we got to put our money somewhere. And then back then, this was early on where we would kind of hide that we're talking about whole life. To be honest, and now we're just more blunt about it. But I'm like, what do you want your money to do? I'm like, you want it to be liquid. You want it to grow tax free. You want it to be penalty free. I mean, all these things he wanted his money to do is exactly what could be accomplished in a properly structured whole life policy. But as soon as I told him it was whole life, I saw like his whole demeanor changed.
Yeah.
And he's like, my father-in-law sold life insurance. He was always trying to get it to me. He goes, I'm not doing it.
Yeah.
And, back then we would do the old saying, well, what's your favorite candy bar? And Cameron, what is your favorite candy bar?
Snickers.
Snickers. If I put a Snickers bar inside a wrapper of a Butterfinger, are you still going to enjoy the Snicker the same way?
Yeah, of course.
The only thing different is the wrapper or the label. And so what we encourage people to do is and we're at fault as well. We weren't big fans of whole life until we became educated. So I would encourage you to be educated. And so right now, let's talk about what some of these myths are. Cameron, what's your favorite myth?
Oh man, my favorite one that you hear most often is always that whole life insurance is a bad investment. What would you say to that, Faso?
I would say it is a bad investment.
Why? Why?
Because, well, there's so many other ways where you can get a higher rate of return. You can have a bigger return. I mean, this is not a great. The reason why it's not a great investment is because it's not an investment. And maybe that's a better way to summarize it. This is basically a high yield savings account with a death benefit.
Yeah.
So if we compare apples to apples, this will beat any sort of high yield savings account. But if it, as far as an investment, it's not a good investment. What would you say, Cam?
I agree exactly with what you said, and I agree with that criticism. When it says that whole life insurance is a bad investment, absolutely, we agree with that. Part of one of the reasons that I think that it gets mislabeled or it has this criticism again is because people have a lack of understanding of words, right? To say this properly is that they commingle investing and saving almost interchangeably in the financial industry. And so again, we've got to separate these two, make sure we understand the difference. Saving is an act, right? It's where we put money, right, for a future occurrence. Whereas the investment is, hey, I'm looking out there, I'm searching for a return. And so these are two separate opportunities. The infinite banking and saving inside a proper design policy is going to fall under savings. And there is no better savings vehicle that we found, right, that satisfy everything that we want it to do. On the investment side, man, we agree. We're not looking to invest in a policy. We're looking at opportunities that create cash flow, right? We got 20, 30 of them that we discussed on this podcast. So I don't need to list them all, but that'd be my 2 cents there, Faso. Do you wish you could finance all of your investments with your rewards credit card? Just imagine all the traveling that you could do with those miles.
Well, since they won't accept a credit card for a down payment on a rental property, you can do the next best thing and you can finance your investments by using the infinite banking concept. And imagine all the traveling you could do with all that tax-free cash flow by just adding one extra step to your investing process.
You can learn more by scheduling a free 15-minute discovery call with Anthony or myself. The link will be in the show notes. And now back to the podcast. Criticism 2, man. You want to throw it at me? What do we got?
My next favorite criticism about infinite banking is that you're going to lose money in the early years. Now, I will say part of that's true, but with a lot of what you're going to see, there's some truth in the myth, right? I will say the way we design these policies is there is going to be that slow start. The first couple of years you put in $1, you're not going to be able to access that dollar. That is true, but that's also temporary, right? Because that money will eventually come back. And what we've often talked about, oftentimes if you're in a business or you're trying to get educated or you're trying to do something powerful or life-changing, rarely do you get immediate results. You know, there's going to take some effort here, and we're starting a business. Rarely does a business profitable from day one. Or if you're going to get your college degree, it's going to take some time, 4 to 5 years, 5 years now, sometimes 6, and all these expenses, and you haven't earned $1 in your career yet. But the reason why you're going through that same slow start is because you can see the fast finish coming up.
Mm-hmm.
Any comments to that, Cam?
Yeah, one of the things that we'll do when we're introducing somebody, right, is because it's all based on education. If everybody understands the policy, man, everybody's going to be happy because we know how this thing's going to perform for us. One of the things that we point out is that you do, in fact, there's a cost to that policy, typically in the first 3 years, right? We're trying to get that cost as down or to happen as get to a break even as soon as we can, but there is a cost to it. And if somebody goes down this road, they do need to understand that. So along with that, when we go and we educate, is I'm going to show somebody that there's a cost the first 3 years. But in addition, if you get to that 4th year where there's a break-even point, and then you look at the ledger, every year after that, from 5 year and beyond, there's a positive annual increase between the premiums that go in and the cash value increase. And so I always ask people, hey, if we can get past these first 3 years, man, we are in a great financial position. And so that, again, is nobody's trying to hide anything. Again, it just comes with a little bit of education. And I tell somebody, hey, if you cannot afford or you're not comfortable with that loss of liquidity, this amount, depending on the policy we're looking at, IBC is not for you, right? If you're looking at loss or care about a loss of liquidity in the first couple of years, you need to go do something else. But if we can get past those first 3 years, again, there's no better scenario than a proper design infinite banking policy.
And this is where education needs to come into play. And one common tool that we will go through our education process is, I call it a case study, where we got to store our cash somewhere. We store it in a high yield savings account and buy an asset. Or what if we save the same amount of money, but in one of these infinite banking policies and bought the same asset? And then we kind of look at the end of the day, who has more money, and more importantly, why. But I don't mean to give away the answer, but you're going to have more money with infinite banking, and that's buying one rental, that's buying one asset, and that's incurring the slow start on that policy. You buy asset 2, 3, 4, and 5, you've already incurred that slow start on asset 1. So when the more assets you buy, the more and more efficient these policies are going to be. Cam, what's another one of your criticisms about infinite banking?
One of my favorite ones that I hear often, and this comes from somebody that's just first kind of getting introduced to infinite banking, is they always say, why would I ever pay interest on my own money? right? And that tells me that they've done a little bit of research. Maybe somebody told them about it, but they don't have all the details. And again, I could see why that would be a concern for people. But again, with a little bit of education, we can get over that hurdle pretty quickly. And the education that someone needs to understand is that when we're funding an infinite banking policy, we're creating cash value in our policy. And we actually have two options in which you can access the cash value. One is a surrender, where you just take it out of your policy, just checking savings account, very similar, right? The second option is actually a loan against your cash value. So we build up cash value, we call up the insurance company, ask for a loan, and they're going to send us a loan against our cash value from a different account. It's called the general fund. And so again, we've got two accounts in play. Cash value here, and we have a loan against our policy over here. The money is coming from the general fund. Anthony, what is our money doing in our policy while we've got a loan outstanding against it?
Increasing a little bit each year.
Every single year, right? I tell people this all the time. Infinite banking is boring. It's not sexy once you understand how a policy works. But man, we can use it to our advantage. And the longer that we have that cash value in the policy, the better off that we're going to be. So again, that tells me somebody's done a little bit of research, but they need the finer details. So, Anthony, all right, another common misconception or kind of mud that gets thrown at infinite banking would be you'd be better off if you just invested. What do you say to that?
This is one of my favorite criticisms because I that was one that I had when I first learned about infinite banking.
Yeah,
I went to my financial planner, like, hey, I'm going to do infinite banking through whole life. He's like, oh, I could earn you a much higher rate of return. But the issue is, this is not about a rate of return. This is not either or. We're not saying put your money in an investment or put your money into life insurance. The way that we design this can be an and asset, that we have to store our money somewhere, and we can prove the mathematically, and we're put a link in the show notes to my favorite comparison, as I alluded to earlier. But we got to store our capital somewhere. That's really what we're doing here with infinite banking. And so when an opportunity comes, we want you to take advantage of doing it. So we're not going to miss those opportunities at all. As a matter of fact, we're going to improve your returns on that. Because not only do you have the return from the investment, but you also have the return from that the policy continuing to grow, having that uninterrupted compound interest. And in addition, we can create some tax deductions. Meaning, if you use this policy loan to buy an income producing asset, we can deduct the interest we pay the insurance company against that income, and the money that's inside our policy, as you alluded to earlier, Cameron, is continuing to grow during this time. That's growing tax-free. So in this case, the truth is the exact opposite. By using infinite banking, you're actually going to get a higher return, not a lower return. Anything you want to add on that, Cam?
No, if you guys have any questions on this, I would urge you guys to go follow up. Click on that link below and go listen to that video. Anthony does a great job conclusively proving that we'll be better off doing it this way.
Wow. Dang, thanks, Cam.
Yeah, you're welcome. It's the only one.
What's another criticism that you've heard?
One of the common criticisms that I've heard is that agents are just out there trying to make a big commission. That is one where I almost just laugh when I hear that one, because it could be further from the truth. If you have a little bit of education on policy design, you'll actually see that IBC agents are designing the policy in a completely different manner than historically how whole life has been purchased and sold. And what we're trying to do is we're actually trying to lower the base premium, which lowers the commission. And so when you look at that as an entirety, the commissions that come to an IBC advisor, right, that come to myself and Anthony, are probably 30% or more less than what someone else would have earned doing it the traditional way. And so for years, one of the reasons that I think that there haven't been as many infinite banking advisors is because of this hurdle on the commission side, is that you've got to be in it for the long run. You've got to have the right intentions when you're out there designing a policy. Is you need to put the client first, and you cannot put your intentions first, right? Is because, man, when you design a policy, you've got the control over it. The client really doesn't know, especially in early getting started early. They don't have the understanding. So man, I almost laugh when I hear that one. Makes me a little upset because Anthony, you and I have been doing this for a really long time, and you don't stay in business for 15, 16 years if you're out there trying to take advantage of people. What do you got to say?
Just hit on what you had said, Cameron. I'm sure it's happened to you as well, but we go to maybe some financial services conference, and when people ask, well, how did you do enough production to come here? Well, all we're selling is whole life. And so that gets people interested. Well, how are you framing whole life to be able to do such production? And when we explain it, well, okay, here's what you're going to do. First, you're going to get a 70% pay cut. Okay. And then you have to educate people, and then you have to service the loans and help with repayments. Okay. Then they are out the door. What I try to tell them, what makes infinite banking different than more of the traditional whole life, most time traditional whole life, you view that premium as a payment, or your policy is an expense. But if you're doing infinite banking, those premiums are deposits. We're building assets. So what happens is people are more willing to put larger premiums in because they see the value coming back to them. It's not that they're doing a policy to help their family after they're gone. This can actually do both. So I think indirectly we may be taking a smaller commission, but if we're doing it right, clients will end up see the value and put more premiums in.
That's right. And if you guys are out there and you're looking for somebody that has the right intentions, somebody that's out there that's going to prioritize strategy over sales, guys, go out there, go to the Nelson Nash website, and you can look up Infinite Banking certified practitioners. Anthony and myself are both on there. We'd love to help you guys out.
Cameron, one more note on you'd mentioned about that client you had earlier who went to a buddy and designed a more traditional whole life. So not only did he not have cash value till year 3 or 4, his agent made 3 or 4 times more money than if he would have done it with the infinite banking strategy.
That's right. I hope he's not listening because he's going to feel really bad, right? Just to repeat that. But well said, Anthony. All right, so let's make some kind of differences. Anthony, I agree with what you said kind of early on as you were talking about the infinite banking isn't a silver bullet for everybody, right? It is a great framework and strategy for the right type. Actually, I wouldn't say the right type of person. I would say that if your goals align with looking to create cash flow and passive income now today, man, pairing that with infinite banking is perfect, right? So, well said. Hopefully we dispelled some of those myths for you guys and help you realize that infinite banking is not a scam.
Now, and if you're let me just add one more thing, Cameron, to what you had said. If you're trying to create some passive income, you owe it to yourself and your family to evaluate infinite banking with an open mind. And maybe you might go through it and like, hey, this is not for me. Then at least you check the box and you came to that conclusion yourself through education. But what we found is when people really see how this works, how flexible it is, the opportunities that this opens up. Because Cameron, I wonder if you would agree, one of the side benefits of infinite banking is people have control of their money, oftentimes for the first time in their life. Before, they were just delegating that to financial advisors and just hoping the money's going to be there in retirement. But we're seeing people finding these opportunities. I mean, there are so many ways to create passive income. And as you can, if you're following our podcast, you're going to see about every other episode is a different way to create passive income. And I know a lot of times people think about real estate, but we've had clients on there flipping websites, flipping raw land, buying real estate with no money. I mean, there's just an amazing ways to do it. But in order for you to execute that and achieve your goals, you got to get educated. You got to have your money aligned and accessible to help you achieve your goals. And infinite banking, again, one of the side effects of it is you end up taking the blinders off and realizing there's more to investing than Wall Street. And once you get that taste, once you get that, well, I can't say check in the mail because we don't get checks in the mail anymore, but you get that direct deposit in your account when you're not exchanging your time for money, that can be life-changing and addictive. So we encourage you to learn more. Cam, what are some ways that people can learn more?
There's a lot of different ways. Along that line is learning more. One of the easiest things that you can do is join our Facebook community. Is we have a community of our clients and non-clients that are in there, to be honest, and we're out there kind of keeping the dialogue going and facilitating conversations between these guys, not only on infinite banking, but also on opportunities that exist outside to create cash flow and income. That's a really easy hurdle to overcome. The other one that I would tell you is reach out to us. Feel free to jump on a call, have a conversation with Anthony and myself. Is what you'll realize is we're education based. We've got a bunch of resources that we've built up over the last 15, 16 years that we've been doing this that we're happy to give you. We've got it all online. We've got an online course we'd love to give you access to. Additionally, what I would tell you is that I would say if you guys are out there and you're skeptic, still a little standoffish on infinite banking, do your own homework, right? Don't listen. You don't have to listen to Anthony or myself. There's plenty of books that are out there that have done a really good job of explaining infinite banking and some of the strategies that come along with this. And what I tell you is you guys are lucky is because when we got started, there was just a handful of books. Now there's a bunch of really, really good ones. If you guys have questions or want a reading list, man, email us. Feel free to reach out to us. I'd be happy to give you 5 to 10 books that will get you educated on infinite banking. And if you get through those 5 to 10 books, you're going to go know more about infinite banking than probably Anthony will. So you guys feel free to reach out to us. The other thing I'm going to add is this was great advice. And we got this from a podcast earlier this morning. We did an interview. Great guy, super bright. And one of the comments that he made was he had talked to infinite banking practitioners over the years, but really his tipping point was not talking to another IBC guy. He was actually talking to an investor that does infinite banking, has been very successful with it. So granted, he probably had his guard up when he's talking to all the IBC guys, but when he talked to someone that's actually practicing it, man, it made complete sense to him. And that's really what pushed him over the edge. So if you guys know somebody out there, feel free or reach out to us. We'll put you in touch with some clients.
And you know what? If you don't know somebody, a great way to ask is join our Facebook group. There's no cost. You don't need to be a client. And then message somebody in there. The people in there in that group are going to be open because they have a passion for IBC. Go directly to them. They have no skin in the game, but they can share their story. And one thing we're also going to do, we created a video of the 5 questions to ask an IBC agent. We will go ahead and put that in there as well. And bottom line, we do your research. Come to the conclusion yourself. And one thing I'm going to steal from you, Cameron, is don't listen to the opinions, but focus on the facts. And that will lead you to the right conclusion.
Could be the smartest thing you've said in a long time, Anthony. Guys, we hope you enjoyed this episode and take care.
Go make it a fantastic day. If you like this video, I know you're like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.